Risk disclosure here. Trading in a foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin and utilizing leverage can carry even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange markets using any of our software alert products, you should carefully and diligently consider your personal investment objectives, levels of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. And most importantly, as I have seemed to constantly uncover, most of the people that have contacted me were not listening to the settings of their groups. And trust me, all of the groups out there, Impact, Market Hackers, our group, which is Legacy Launchpad, and there's obviously other groups all over the world. They're very good at captaining along with their subscriber and member base. So please, outside of my calls, give a shout out to the up and down line and make sure everybody's got the same settings. Because I just got an email today about some settings that were off just tremendously. So we have to take a look. But the cool thing is I was able to diagnose that. Why? Because they sent me a complete and unlocked my FX book. So I was able to peer in and see exactly what's going on along with a couple of my other teammates. And it was just absolutely crazy settings. I'm not sure what the motivation there was. So always important. If you're sharing any of your results from using our software, which is only allowed in designated Facebook groups, please do not use the term company recommended settings. Auvoria Prime is not recommended. Say we're not a financial advisory firm. We don't have a brokerage firm. We don't recommend brokers. We license software. You can open it up. It has its own default settings, which are adjustable. Please trade at your own risk and discretion. So Auvoria Prime and myself is not any company recommended settings. That comes from me and the developers. So let me just close out of all this and go into the calendar. So let's double check we're showing that as well. All right, calendar, Forex, week of December 6th through the 12th. Really not a lot going on, but yet the break of the dollar has led to some craziness in other currencies, something we have been sounding very, very loudly from the hilltops. Not a surprise to the current listeners. Communicate it to your teams, please. We do have some Euro-based events on Thursday, ECB press conference. I am getting some whiffs, if you will, about the Brexit deal. So let's take a close look first at GBP USD. Actually, first let me start with the DXY. This is a chart of the DXY, tradingview.com. Daily chart, each candle represents a single day. Lots of support and resistance lines you can see here in both the red, orange, and black, which is the big one in my opinion, along with the 200-day moving average. It's just a generic MA that I use for analysis purposes. So all my charts look the same. The green, or whatever the hell you call this color, is up. A red bar is a down day. I do recommend at some point in one's career, if they plan to get into this deeper, and I am also getting some fabulous feedback, by the way, from the group on the excellent performance of Airo, AIRO, our manual trading software. No, I am not taking alerts. I probably should be. Over the holidays, things usually have a tendency to slow down tremendously in finance, especially financial planner related stuff. So I am planning to use an existing license I have with my platinum package and set up Airo, take some trades, and I can report back to you guys. But from what I understand, the feedback has been absolutely fabulous. So this is the beauty of the diversification concept. So let's take a closer look at the dollar. So typically when it breaks, as you guys can see down here, when we break, came back up against the resistance line, had another day that printed a big drop. This is normal reaction starting to essentially barbecue the longs down here, as I like to say. But usually once you have a fairly protracted move, you'll spend some days dojiing. So far, we're 3 days into a doji, which is nothing more than an indecision day candle that prints. It's printed the previous 2 days. It's in the process of printing today. So now that we know that, let's move over to GBP. Okay, so again, broke out from what was a pretty big lift off of the wreck from the pandemic bottom, which is darn near the last day of March. Things just ripped back up. A lot of policies were brought in place to save the world. And essentially that lifted almost all boats in currency, equity, as well as commodity land. So here we are, broken out. Notice we came back down and tested, sort of peeked through, if you will, the support line. One thing I'm going to do so you guys can see this live, I'm going to overlay my new to my presentations, not new to it. It's essentially just using the prediction and measurement tools button to go in and do what's called a fixed range volume profile. So once we do that, we're going to select the whole period of time. I want to see all in a selected window. Okay. So when this prints, don't get hung up as much on the in between stuff. What you do want to note is where the highest volume executed, which is also centered with what's called a point of control line. This is a POC. So you'll hear me often refer to the POC. This is from a volume standpoint analysis only. Okay. This is an aggregated volume analysis. This is very, very powerful in futures and in currents or futures and equities land. Not as much so in Forex, although I hope that that statement is eventually proven wrong with at least the comfort level of the volume data being brought into this particular platform, TradingView, because they swear to me, they're tech guys, that they've got 11 different feeds coming in and it's all aggregated. So I think at some point, maybe if I'm wrong and this data is really solid, which I hope to be, it'll be a better analysis tool for us. For now, they are probably getting sick of me saying we need the time-based profile as well, which we can just represent with X's and O's. And I'll get into that if they can actually make that indicator active, which they say they're working on. Keep in mind, this is something was developed in the very early days by Peter Stettlemyer at the Chicago Board of Options Exchange, and he only holds a significant license to this type of indicator. It has been used for now a couple of decades in various forms. You'll see it if you Google market profile or auction market theory, of which I am an industry rated authority on. But it was never really able to be presented quite in this way on TradingView. I think they probably got some agreements together with the CBOE and Stettlemyer in order to get this indicator, and we're able to overlay it, which is great. So I'll continue to do my bitching to their tech team so that we can get the time-based one, because I tell you, that one there is no argument of quality of data from a time-based aggregate, right? So you can always argue the quality of data from volume because you're relying on exchanges and or 14 big banks in this case to report accurate volume. Whereas on the time side, the tool is just putting an analysis together on an aggregated time, which is indisputable. So as I often say, people lie, but charts don't. Okay. Fundamentals can be manipulated, but charts can't. So what can we glean from this information? Well, if we start to pull back to the point of control, I would imagine this will be a fairly solid piece for the cable US dollar deal here. So for somebody that is taking trading alerts, right, whether your system is shooting manual alerts to you or it's executing the trades for you, the key thing, in my opinion, is just to understand from just a real broad perspective technical analysis. You don't need to get into the deep dive stuff that I do, although I would highly encourage a slightly deeper dive than even what I talk about. I'm trying to keep it as big picture because ultimately we have to be able to say at the end of all this analysis, okay, this is great, Steve. So what the hell does this mean for me? What it means is that if something's breaking out, and a much better example of this is the euro US dollar here, you can see we spent quite a period of time balancing in a tight range and then we broke from it. Okay. So now that we've broken out above which is arguably a pretty solid range of basing, it makes it that much more solid of a support and resistance lines. Now, first one essentially right here, just underneath 1900, or essentially the 1900 level, maybe about 10 pips underneath this level. But the next one is the point of control line. Now, this is a much less of an important indicator because it's really only based on volume that was executed from the 24th of July of this year till now. Okay. And again, it's just volume. I wish I had a time overlay that looks like this, and you can actually put the two of them together. One's situated on the left, the other can be situated on the right. And you have sort of like dueling indicators, and it'll help center what could be an attractor if we fell back down inside this range that we're in. So that is volume profile, hopefully soon to be time-based profile for you guys. Now, one note of caution, by the way, on the email that I received, the individual that I received the email one was trading, which I considered to just be an absolute wild rocket of a currency, and that is GBP NZD. I do understand there are good arguments behind this as far as trades that can be taken, or essentially trade opportunities. We've all seen the spreadsheets that show that. Jesse was very insightful in providing that early in the spring. What it doesn't take away from, though, is the fact that this currency is really volatile. Okay. And as you can see, just in this one day alone, I mean, this thing just absolutely ripped thousands of pips one way or the other. Okay. So, and just understand the volatility associated with that. I would never be trading on personally unless I had like a proven strategy that could just go through every single period of time. And, arguably even our really conservative high volatility settings that we had for Einstein and Alexander, those settings were about as super ultra conservative as you can get. It still would not have withstood this rip. I mean, this was just a widowmaker candle essentially. Okay. So just know that. Going back to GBP, knowing what we know now, I think this is kind of like a ripe area, if you will. Once we've broken out, we've bounced off that line. Notice we bounced way off the line. I think some of this is Brexit that's beginning to bring some murkiness into these candle patterns. But essentially, this last, I don't know what, 10 days I'm looking at since we broke out, is usually pretty good for a martingale strategy in a shorter period of time. Although we have seen certainly some volatility just in the current day, which is kind of crazy, as you guys can see. So we went pretty big range. Okay. What else do I want to address? Euro USD. I think that's everything I want to say here. What else do I want to say? Gold, it's continuing to lift. A lot of people are bailing down here. We actually added some additional exposure and client accounts down around this area anyway, because it wasn't really, none of this drop was precipitated by any serious volume as far as the futures contract on this or this particular spiders ETF that you guys are looking at. So with the drop down to these levels here, precipitated, this has all been a factor of the weaker dollar here, in my opinion, along with other factors of concerns. Let's see, oil, still really nothing much going on there. USD CHF, do know this has broken. Let's see if I can lift this up a little more to show you. Yeah, I can never seem to get this chart to drag up. How to do that. All right. So we've broken below, which was a pretty solid support level from quite a period of time ago. As you can see, I've had to go way back in this currency all the way to, this is more of like a flash crash period of time. So it doesn't really count as much for that. But I mean, we're essentially in uncharted territory down here as far as the Swissy. So, the thing is with, if I don't know how many, is anybody in this room trading this pair? If you are, just put in a yes, just out of curiosity. Can't say this is that large of a sample size, but give me an idea if we are. Okay, so we get a fair amount of people trading this. So I would say in this particular currency, we should have, make this bigger. We should have a really solid point at right at this support line we broke through, which will now be resistance, the 0.89463 area. So you might want to make a note of that. And if we get back up to that again, this should hold for a push further down. But again, it's always tough to predict stuff like this. I could be dead wrong in this analysis because we're down in an area we just haven't spent any time in, right? So when you're getting down into new territory, which in this case is some real low, and I probably would have to go back quite a period of time, if ever. It's much more difficult from a technical analysis standpoint to see, well, where would you go down? In this case, we would be taking, I'm not going to blow everybody's brains out with new analysis, but I would just be taking what's called a Fibonacci extension down into this point, which is just looking at measurements of the current range it's been in to project potential parts that would hit on a lower chart. I could do that at some point if everybody wants to take a look at it, but I figured I'd just allow everybody get comfortable with the current technical analysis I've provided, and I'll continue to add layers of more stuff. The reason you want to do all that is some carries more weight than others. Obviously support and resistance points just based on price action of candles carries, in my opinion, pretty solid weight. There are people that just trade off candle and price action alone. But if you layer in volume, if you layer in an aggregate of the volume, and then more importantly, time-based profiling over a period of time, and you build what's called a composite. And that's just seen a lot of the videos that I shot for different organizations using a product called LinSoft. It's IRT's LinSoft, which is the best at that. And then it'll also allow you to drill down inside, which you're not going to use in currencies. But if I ever talk about futures or past stuff you may have seen videos on, we talk a lot about the footprint, which is essentially where the executions take place at the very micro level, and putting those on a order flow based profile. So that's where you get the most insight. Not going to really help us all here if, we're accepting trades, we're not having to hunt them down. I mean, heck, even in Arrow, you're accepting trades and a little more manual there. Looking for patterns and stuff. But I should say accepting trades in Einstein or accepting trades in Alexander versus Einstein taking the trades for you. At least you understand the areas where you really don't want to step in front of the train, as I've talked about. All right, so that's that. USD CAD. Let me back this up as well. So unlike a lot of others, we're actually going to switch to the monthly chart on this. All the way back to 93, you guys can see we know essentially the whole area US CAD is traded. You can see the higher the time frame, typically the more solid the support and resistance lines are. So if we're looking at a monthly chart, you can see why we poked above this to the tune of almost 5,000 pips, but we still came back down inside the range just looking at monthlies. This was pandemic related. And, we had, it almost stopped at the exact same point that it had many years before. So a lot of people always ask, well, why is that? It's sort of a self-fulfilling prophecy. There's nothing more than the market from a time perspective came up to these type of areas, these types of areas where there's just not much trade, where you can see we blew through a particular point, right? And we came up into these areas. These are called low volume nodes. And that's a market profile term, as I'll bring a few into, but high volume nodes, HVNs, or low volume nodes, LVNs, have significance in technical analysis because very simply, it's almost like an air pocket. We'll go through it, and then we'll just zipper through it, which is just nothing more than a rip through a particular area. And then it becomes a low volume node. They can have just as much effect as reversing price as a high volume node can. So they carry a little bit less as far as their importance. I think a high volume node carries more importance just because there's been much higher volume that's executed. There's been a lot more time, because we're not looking at a time-based profile, just volume here. But let me just overlay this so you guys can get a feel for the whole period of time. And I know we're kind of going a little deeper than I probably should be going at this point, but this tool works really effectively on these charts. So here's the profile for the whole period of time in 1994 to now. And obviously we really didn't have a lot of volume to go on, so this stuff doesn't carry as much weight. But I would see that if I deleted this off, here, I'll delete this. And even if I draw it to a little more recent time, let's say starting maybe in 04. Notice the point of control didn't change much, right? So it's right around this area. Again, not as important probably in Forex analysis, but this is just a super effective tool to use on equities or options, or any type of commodity for that matter that's traded on a centralized exchange, whether it be, like the DAX, which is traded on Eurex for a lot of the European folks, or, like an S&P mini contract, which is traded on the CME here. All executions on one centralized exchange. So it makes it a lot more solid, or meat, if you will, on that analysis bone. And that's why for Forex, I want these guys to get the time-based profiling set so we can look at this analysis in the same way. Because very simply, if we've spent a tremendous amount of time at either a particular volume area, what was high, or a particular amount of time area, or we spent a lot of time in a given area, they are very effective analysis in forecasting where price can migrate to, or bounce from, or go up against. That makes sense. All right, so enough of that. So let me just get into some of these questions. Do we get a monetary rise in USD CHF? So let's take a look at, and this is a monthly chart. Let's drop down to weekly. Let me go to daily. Yeah, I mean, we could spend some time underneath the red line. That's really the bottom line. So if I was accepting trades, anything that came up against this, especially since notice we had a doji candle that already tested this resistance point. So just think of resistance overhead, right? Support below. That makes it easier to put clarity on how it works with the red and the orange lines. By the way, I get this question a lot. This is the squeeze zone, which I actually like because it draws current support and resistance as time moves forward based on a whole mess of factors, which you guys can go see. But the squeeze zone was designed by Sun, so I actually like it. All right, so that's my view on the Swissy. Is it a good idea to change lot size to reduce drawdown size later? So we get this question a lot, And, I really loved that when Dasan did his whole last year of the MyFX book running with Variable, remember this was version 1, um, he never changed the lot size. He kept it at 0.01. So yes, if you look at those MyFX books back in the early day, they, had higher monthly returns, right? That's because the account was smaller. And as you may have seen, which may answer your question, Elizabeth, a little bit better, I'm actually going to read this to you. I don't know. Have you seen Dasan's post, which helps address your question? Did you see his post in Variable yesterday? It says that where is it? Here it is. It says this approach has the same effect as increasing your initial lot size, but does not increase risk proportionally. Meaning that if you added more pairs to Variable, this is typically for a little bit larger accounts, you're adding the how should I say it, just additional chances that a particular pattern setup will show, which increases just by default your potential return. Whereas if you double your initial lot size, you're also doubling your risk. So I'm not saying to go against what he said because he showed all 28 pairs. You've got a lot of, especially in that crosses list, you have you have a lot of Wild West stuff, GBP, NZD, stuff like that. But, certainly of the majors, which there is a big list there. I don't know if you guys saw this, but here's the majors. I'm actually going to copy this. Select the whole message, copy, just in case you guys don't have access to, I'm going to put this in the chat window. So see if this will paste. Maybe not. Yeah, it should. Okay, here we go. Yeah, look at that. Cool. So that shows up in, I didn't paste the bottom part. We're just looking at the majors, but you can see exactly what Dasan said. And obviously this is for, this is for bigger accounts. It's for folks that have, the more willingness, if you will, to go to a 0.02. But just remember, you put on a 0.02, all the other trades in this sequences that get successively large are now going to be also double. So just remember that. So you probably want to adjust your equity inside the account to 100%. So essentially, you're just casting a wider ability of drawdown to affect the account, if that makes sense. So if so the question is, I understand that now, but this is my second week with Variable, okay? And these pairs were set up last week when I had no idea about the strategy. So I'm pretty sure, if I'm not mistaken, when Dasan shot his original video, and I could be wrong on this, somebody correct me if I'm wrong, didn't he go through with you guys in detail all of the pairs? Because I've noticed that one of the common themes among all of the Variable accounts have been running for a long period of time is that the ones that were running more pairs did better, obviously, right? But the lot size wasn't changed much. So if you want to sort of try and get out of drawdown and you're okay with, putting more risk on the account to pull out a drawdown faster, you can increase it to 0.02 if you want. And if you can't afford that, then, if it pulls a little bit out of drawdown for you, make sure you switch it back to 0.01. Don't forget. What's the difference? What's the difference, by the way, a long and short trade? Sorry, Brandon. So Nicole, no worries. I would go through a Daisy Duncan's course. She actually goes into detail on that. But long just means you're betting on the market to go up. So if you're looking at this chart here, let me just go back to Euro USD just because everybody's so familiar with this. Once it broke out from this point, if you were a manual trader, I would not be fighting this train of breakout. As you can see why this huge green candle printed successively. We had 3 days of one time framing up, higher highs, higher lows of each day. I would not be short, right? I would be long. So I'd be betting for it to lift, right? Whereas if the opposite was the case, spent a bunch of time bouncing and then we broke below this area, I would want to be short. Doesn't mean long trades won't work below these areas, right? I'm just telling you guys they have statistically significant differences in win rates once you break from a balance area. But just understand, live by the sword, die by the sword there, Elizabeth. If you decide to increase your lot size to get out of drawdown, yes, variable has high win rates. You also do run the risk of blowing the rest of the account out trying to get out of the hole. So just remember that. You can also go the other way too, folks. If you're in drawdown, you have a lot size of 0.02, you could certainly drop it down to 0.01. And make sure you guys are subscribed to Dasan's channels. What else did I want to address? All right. Let's see if I can find this. I got this question about Twitter. Let me just log in here. This is my Twitter handle for you guys that don't have Twitter. And look, I get it. A lot of people are pissed at Twitter. I do understand that. Yours truly as well. These guys have been silencing lots of free speech, which is unfortunate. But we still continue to use it for an analysis purposes. Essentially, it looks like I can like this, right? Look at that. Auvoria Prime Marketplace. It's building up. Great. But this is my Twitter handle. It's at fxestrader.com. If you want to follow me. Most of what I post, you guys, is just about. Actually, hang on a second. Let me make sure I'm sharing that screen. There you go, Sam. Most of what I post is just about the markets. I don't really get into a lot of crazy ass banter on Twitter. And by the way, David Hunter, this guy's one of the best. So he was with me and on a lot of these calls. So, here it is right here. Again, this is all stuff that just adds to your arsenal of reducing risk, right? If you're more educated on what's going on, and you're following people that have significantly solid track records like David Hunter, who doesn't give a rat's ass about jets or hedge funds or being on the cover of Forbes magazine. He just wants to be super good at what he does. So those are the kind of guys I like, right? And especially the ones that are exceptionally generous with their time, that have no reason to do that. Here's our boy Casey, by the way. I just shot the How to Trade a podcast with him. But in any case, you guys can follow along on Twitter. Don't get too caught up in this stuff. But I think, when it comes to the Forex related stuff or anything that has to do with the marketplace, as you see here, some of the stuff I've been retweeting from Auvoria, it just helps in the education. So the only other thing, let me go over to Telegram, see if I can pull this over for you guys. I do want to address this last and then let everybody go. Where is it? There it is. Okay. So this, if you guys have never seen what a U.S. District Court lawsuit looks like, that's what you're looking at right here. Okay. It's typically what you'll see when the FTC's coming after your ass. So anytime you see Pennsylvania Avenue FTC, it's a bad day for the plaintiff, or I should say it's a bad day for the defendant in this case. So this is another case that, it was just filed essentially the last couple of weeks. But, another reason why, I'm not going to bore you with the details of this. You can go through this yourself. But summary of the case, these guys are making all kinds of predictions. Hey, we're multimillionaires, we're driving in Lambos, we live in the beach, all this stuff. And you want to kind of try and stay away from this stuff. So if there was never more reason that you want to make sure, at least in this country, um, that you stay away from claims of grandeur. Okay. I know there are a lot of people in Auvoria that have very successful Twitter and online social medias. I think it's great. I don't personally have an Instagram account. Um, but I know I've seen a lot of that stuff. So just make sure you guys are addressing it with the correct um, disclaimers. I know that both Variable and Gearbox and all the others have their own specific disclaimers. So make sure you just search that out, and that you don't see your name somewhere in here like Jeff Bishop, John Bond, Kyle Dennis. And that's that. So if anybody's got any questions on anything, let's see what else. Let me just go through the whole. Here's a question just hit. How do you partially close bids? Suppose market's going up. I want to close some bids from sell bids. I want to know method to nobody reply to my ticket. Kindly give me advice. So if you go to my, if I'm pronouncing your name right, Akmal, Hussein, I think I'm getting right. If you go to my Telegram channel, I have a detailed piece on how to do that. And Dasan has done, along with Tyler and Gearbox, they've done videos to show how to do that as well on both of the Telegram and Gearbox channels. It's good stuff. Let's see what else. Steve, when do you plan to stop trading? So, that's a good question. I don't know. The problem with the holidays in any type of trading is not necessarily that it's volatile. It certainly can be, but what it is it's low volume, right? So there are systems out there that are what's called hunters. These are HFT systems written by big hedge funds, trading shops, whatever, that hunt through the market, looking for low periods of time in terms of volatility or volume, and or pockets of stops. Okay, that's what's called stop hunters. They'll go out and terrorize markets in low volume environments. I don't want to be a participant in that. So typically what I do between, I don't know, depends on when Christmas falls. Let's pop the calendar up here and take a look. So here we are, the 8th, Tuesday. Christmas is Friday. Hey, cool. Christmas is Friday this year. You gotta love that. I didn't even know that. Boy, this is what happens when you get too damn ingrained in your work. So I would probably turn off my stuff between the 23rd and about the 4th, right? Doesn't mean you have to. Doesn't mean you won't make money during that period of time. All I'm telling you is that historically, I don't trade futures between that period of time. And unless something's going to hell in a handbasket in the stock land for my clients, I typically don't do a lot of trading either. Mostly because just historically you have what's called a Santa Claus effect, where you've got a lift in equity prices typically to the end of the year. Not always the case. We could always have some other pandemical BS breakout, or we could have somebody squawking at a central bank. But generally speaking, towards the end of the year, especially if we've lifted tremendously in stock land, a lot of the portfolio managers around the planet, they don't want to disrupt the apple cart. So they'll let sort of the status quo play out, finish out the year in some cases. And many of them get some pretty decent bonuses coming because they've really helped lift things out of the crapper towards the end of March, rightfully so. A lot of this central bank teased, if you will. So with all that, long answer to your question, but that's kind of why I'll turn off trading systems or I won't participate. I don't have, as I'm constantly telling everybody, I don't even have a whiff of FOMO. I could care less if I've missed out on something. Doesn't matter. And I keep telling my kids this, right? So if it's friends that come into their life and turn out to be crappy friends, get rid of them, right? I always joke, cut them off like a guillotine, because they do nothing but drag you down. And there are so many friends out there, or stock trades, or forex trades, and this carries in almost everything. I've heard Tony Robbins talk exhaustively about this, of how you really want to just focus on, there will always be opportunity down the road. It's not going to stop. So if that in fact is the case, and you can develop that mindset of staying away from the FOMO part, again, all part of risk management, right? You have the ability to, live to trade another day. That answers your question. Can you send me a link where exactly I found this? So if you go into the back office, you'll see the links to Variable. So you got to set up a Telegram account. I'd put it on your phone too. And by the way, you guys, you can turn the alerts off. If you have like tons of Telegram channels you're subscribed to, you could turn the alerts off and it's not digging your phone all day. But I would absolutely leave on the Auvoria's corporate, right? I would leave on Variable, Gearbox. If you're trading any other kinds of software like Arrow, I would leave that channel on. I would certainly leave my channel on, and then just turn the others off if you want to. Makes it easier. But that's where the link is, in the back office. So the live accounts, I'm getting this question a lot recently, by the way. I do think we probably got a pretty decent 2 weeks of trading. So as far as live accounts, and in all fairness, we just got all our VPS stuff ironed out, and at least enough versions coming out of Gearbox and Variable, which to be expected. I know some are impatient with that, but typically software releases, especially since we're not Oracle, right? We're not Microsoft. We don't have hundreds of developers working on this. These things have to be ironed out. So you got to have some patience like that, whether you want to exercise that or not. That is the case. But I do think we got a good couple of weeks of trading. Then I probably would just shut it off for the whole year. But with the demo accounts, you can run those all the time. Why not collect some data, right? Or switch the license to demo. Do that. So I answered that. You're welcome. Thank you very much. Happy holidays to you as well. Let's see what else. Yeah, I think that's it. All right, so we're coming up on 48 after the hour. Everybody else has got things to do, including yours truly. I wish everybody a great trading week. See me on Saturday. You can listen to me drone on about another subject on Saturday. But to wish everybody a solid week. May the trades be with you.